Good evening, everyone. This is Wayne, and this is the video version of the trade report for Wednesday, April 4th, 2018. Well, the markets did something that is, for all intents and purposes, indescribable today. However, I'm going to do my best. Stay tuned to find out more. Greetings once again, everyone. Thank you so much for spending part of your day with me as I review the action and activity in the financial markets. So in the T's, I did say the markets did something today that was virtually indescribable. And the reason I said that was because to simply say the markets went up today, or even to say the markets recovered today, is probably like saying, the Astros won the World Series. It's like, well, tell me about it. Okay, so that's what I'm going to do today. We're going to tell you about what happened today in the market because it was glorious. All right, the S&P futures, 15-minute chart. That's what we have here, as well you know. Little bit of review. Yesterday's trade was sloppy, choppy, up and down, back and forth, with a little bit of a pop to the upside. And you can watch yesterday's video if you'd like to find out a little bit more about what happened yesterday if you didn't watch yesterday's video yet. But the market looked like it wanted to go higher yesterday as we went into the close. And that's kind of what I built my thesis on going into today. Now, I did know that because of the additional trade tariffs that were implemented, or at least pronounced yesterday, last evening, that China would have a response. And the market probably wouldn't be very happy about it, but they wouldn't, they wouldn't go to where in a handbasket. However, they did end up doing that, which was a little out of character, a little unexpected, and I don't think anybody really saw it coming. We knew there would be a response from China, but when China finally issued their list of items that would be accompanied with new trade tariffs, the market just absolutely took a spill. It tried to recover a little bit, went sideways. This is all in the overnight session now. This is all happening when I'm in bed. And then it even took an even deeper dump. Now, I woke up right about here. It was about 3:30 a.m. Pacific time. In fact, let me just make sure that that is where I was. Yep, that's the 3:15 candle. So I woke up right in this, right as the market was coming off of its low. Um, and when you wake up at 3:30 in the morning and you check the market, which is what all good traders do, well, maybe all obsessed traders do, and I am an obsessed trader. Um, it is impossible to go back to sleep again after you see a market that is registering approximately 50 points lower. First of all, there's a big mystery that needs to be solved. What else is going on? Did something else happen other than trade tariffs being announced by China? So this is just, this is very active. And unfortunately, but fortunately, I also own a cat. And so when I wake up, the cat wakes up. And if I don't corral the cat, the rest of the house wakes up. So not only am I managing my portfolio and checking my trades and looking at the market and trying to figure out informationally what has happened, I'm trying to manage and control my cat. And that's probably the more difficult of the two tasks I have at that time in the morning. At any rate, so as I'm watching the market, seeing what it's doing, I'm also seeing that it's beginning to tick up again a little bit. Every candle's moving the market up a little bit higher as every 15-minute increment passes. And at this point, I'm writing my pre-market trade report, and I'm talking about how the market is reactive and how we have a number of issues that are still being worked out, and this market is still having some issues. And I would encourage you to read the pre-market report if you haven't read it, just to get a sense of where I was at, kind of mentally, psychologically, and emotionally at that time of the morning. Well, all of a sudden, it just, things just kept building to the upside. Then we had this one down candle, and I thought, okay, so this was a big fake out to the upside. Now we're going to come down lower. We're going to test this low and maybe even go lower and maybe even find the February lows. Well, as you can see, that never came to fruition. We went basically sideways into the open, had a big push to the upside, which again, nobody saw coming after this huge pop to the downside in the overnight session. But then we just kept going higher. And, we might get a little bit of pullback, a little bit of consolidation, but then another big push to the upside, and a little bit of a pullback, and then more moves to the upside. Now, what happened here is I said to myself, we are going higher. And what I told my trading group at that time was we could very easily, with this type of momentum, reach 2647 in the S&P. And right here we were right about 2610. And they all said 37 points higher in the S&P. Are you crazy? And that's the type of thing I do. I mean, I'm controversial, but I'm also very well versed in being able to read the Fibonacci lines that are associated with my analysis and my research. And this 100% symmetry support line up here was just screaming for price to reach it. Well, one last pullback, and I got long by shorting S&P future, sorry, not S&P futures, S&P futures options, the puts, which is a long trade. In other words, that trade benefits, becomes profitable as a result of the market going higher. And it was a big trade. And the high of the day was 2648 and a quarter. So not only did I make my 2647 target, but we even went about a point and a quarter higher. So, when that happens, it kind of makes you look good. It makes you feel good. And it does one more thing, and that is it reinforces my belief and my reliance, if you will, on the Fibonacci's. Fibonacci's they are golden. They are magical technical indicators. And I talk about them a lot and I utilize them a lot. And for those who are interested in learning more about them, I am developing a course and I'm going to be having a private room on a private Facebook room associated with them. I really believe that every trader can dimensionalize their trading and become more successful, even if you're successful now, to put one more tool into your arsenal of 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 trading, of market participation, is going to give you one more way to develop high probability trades. So at any rate, so as the market kind of came down here, I shorted puts, and it never did go back into value again, at least for a closing candle. And we just screamed to the upside. Now I say screamed. It was a rather it was rather methodological the way that it went up. It was very metered. It was really very measured. So it was to say it was an easy day to trade is a misnomer, but because the market really wasn't doing anything radical, but it was still directional and the sentiment was definitively bullish, it was very clear what needed to be done. You needed to go long this market, but you needed to wait until it got above this area and that area was tested, and then you could go long. This entire area here, I was not convincing me that this market was looking at going higher. It was looking as if this market might be putting in a head fake, which means it goes up here and then it drops and we test the low of the day. And that is not what I wanted to see. This is what I wanted to see, and I got it. So anyway, suffice it to say, it was a very good day. Now, what does this represent? The overnight low, which was the low of the session, and the session high. That is a 90-point difference. This is 25.57 and this is 26.40. Well, it's 26.48 basically. So what we have here is a market that really took the bullish side and ran with it today. And here's what I'm going to show you. And you know what's coming. We're going to take a look at Amazon, folks, because Amazon really pulled a little bit of a rabbit out of its hat today. You know how much I love Amazon. Let me see. Let me get my chart set up here. Well, real quick, let's just go over the averages. The Dow closed up 231 points, and the S&P. Let me get this. The S&P closed up just over 30 points. The Russell 2000 closed up 19.5 points, and the NASDAQ closed up just over 100 points. So if we take a look at Amazon, which was a big part of that move to the upside in the NASDAQ, and if you remember yesterday, I talked about a bullish Rummy being a first level bullish indication for what the next day may bring. Well, when today opened, it looked very ominous, to say the least. The overnight push to the downside, the significant drop in the markets. I mean, there were headlines all over CNBC. Dow drops 500 points. Dow drops 600 points. It was just really kind of scary. But the key is it never found the February low. It did push down below the 200-day moving average, but it never found the February low, which to me was fascinating. With the kind of move the market made and the energy associated with it and what it was, I think, attempting to accomplish using the pronouncement by China to move lower, but still not able to get itself down to the February lows, there wasn't any oomph in the move. Yeah, the market dropped. There was momentum to the downside, but the sentiment was not commensurate with the momentum. So at any rate, here's Amazon, and today's candle is hugely bullish. Now, what happened here is we had a bullish Rummy yesterday, and today we have pretty darn close to a bullish engulfing. But because this candle is basically a long close on the highs candle, I'm going to call this confirmation for an up move tomorrow. I think we go higher tomorrow, even though we closed virtually right on the 1272 extension. So the S&P, sorry, not the S&P, the Amazon closed today at 1410.57, and the 1272 weighs in at 1411.94. So it came in and closed just below that. Now in the extended session, Amazon is trading up at $1,415 a share. So it's already beyond this 1272. So the next stop is at 1456.19. Yeah, 1456. That's a 45-point move in Amazon. I think it has at least that much in it. So we'll see what happens. But the overnight trade will be interesting as Asia and Europe kind of meet, this market as it, just absolutely elevated itself throughout the day. If we get follow through, we could end up having a rather significant update tomorrow. Now, just to recap what I said last night, I did call for an up move today. Well, yeah, I got it. but when you wake up and the market's 51 points, 51 S&P points lower, you're not thinking that the call you made was all that accurate. But after a moment to kind of look at what happened, look at what was happening, and kind of feel the energy of the market, it ultimately became clear to me that there was a disconnect between the momentum and the sentiment. So I wasn't necessarily thinking we'd end up with a day like this, But I was thinking we would end up getting a little bit of a move to the upside, because this overnight action was an overreaction, let's say. And then at the end of the day today, that proved out, and we have a very bullish end of the day, which I do believe now we have an even higher probability of going higher tomorrow than we did yesterday for today's action. So be watching for that. Now, I do want to, let's take a look at the VIX, of course. Always like to look at the VIX. The VIX tells us about the volatility in the market and how much veracity the market energy actually has associated with price action. And you can see the VIX was really participating this morning, but it completely collapsed. The high print was 24.51 and the close was 20.06. So we had almost a 20, well, we had basically a 20% move to the downside from the high to the low in the VIX today. The VIX looks like it's going to go lower. And of course, that means the market's going to go higher. If we get an 18 print in the VIX tomorrow, I'm going to review my strategy going into Friday, because Friday we have a very important piece of economic data coming out, and that's the job report. And when I say the job report, that's the monthly unemployment. Well, it's not the unemployment number, it's the non-farm payrolls, they call it. But there's a lot of algorithms that tie their computer-driven trading models around that number, and the market can get really jumpy and volatile around that number, and it can pop the market higher or bust it lower. It's very rarely a number that when it's presented, nothing happens. That's not the nature of this. This is almost like a Fed meeting announcement. So I'll be watching for that. But for now, we have tomorrow, and tomorrow looks bullish. And I do want to take a look at the S&P. Let me go ahead and rebuild this again. This software, we're going to do that, yeah, and then we'll get that, and this, and that. We're just going to kind of build a chart here while I've got y'all live. Well, it's actually recorded, but you know what I mean. We're going to go ahead and we're going to build a Fibonacci spectrum here. All right, so you remember from yesterday, we took the level from here to here, and I'm looking at the downside of the market, which is the 1618 at this point, the secondary target, which attempted on Monday to get found, and it didn't quite get there. And as I mentioned, it's a big bounce up off of there that typically occurs. And then we had follow through yesterday, and we really had follow through today. But you can also see how price, this is the S&P now, the S&P cash, you can see how price really respected that 100% symmetry support. So, and it respected it from the standpoint of being resistance. When price moves through a level and then begins to move back toward that level, what was once support becomes resistance, and vice versa, which is what was once resistance becomes support when price goes through it. So the 100% symmetry support is presenting resistance. Now, it's not going to be as resistance-esque as a true resistance line, but it's still going to present resistance. So how do we determine where and how far we're going to go higher if we do? Well, we have to take a couple measurements here. So we take a measurement this way, and we did this yesterday as well. And as you recall, the 50% line was presented as it related to yesterday's trade as being the initial target / resistance. Now this is for the upside. And I said the secondary target / resistance is the 618. And then we have the 100% line. And you can see how the 100% line is, oh, sorry, this is the 786. Now the 786 line is literally right on top of this 100% symmetry support line. So there are two lines that are basically at a confluence. They're sitting there and they're clustered together and they're grouped in a way that provide an additional level of resistance. But the nature of those lines is very different. We have the 100% symmetry support, which is now presenting resistance for an uptrending market, or not an uptrending, but a market that's moving higher. And then we have the 786. And the 786, as I've mentioned in the past, is kind of like a trampoline. It definitely it has elasticity associated with it. Price can move into it, bounce off of it, come back up to it. It's kind of playful. It's not really like, like a guard at the gate, and it's not like, like a bully pushing somebody back. This is like, okay, let's have a little fun here. So the 786 did its job. It kind of pushed back and the market moved down a little bit into the close. But tomorrow when it retests that, my guess is it's going to slice right through that and come up to this 100% symmetry resistance line at 2674. 2674, that's almost another 30 points. That's nothing compared to what we moved today and what we've been doing lately. We've been having 40, 50 point days. So this market could very easily head back up to this tomorrow. And that is my thesis for tomorrow, is that the market will go higher. Now, again, yes, the market did what I thought it was going to do as of yesterday's presented thesis in the trade report video. It happened in a very, very unusual and strange way, but it worked. It happened, and I'll take it. Let's put it that way. So at any rate, I'm looking for a move up to 2674 in the S&P, and I'm also looking for a move in Amazon to make sure that I've got that level presented properly here. Now, I do have other trades on, but I can't go through them all in this video. I pretty much want to make sure that I'm covering all the bases as far as going over the market, where I'm at, my thesis, my evaluations of the most important markets in my opinion, which at this time is the S&P and the VIX and Amazon. So I'm looking for Amazon to go up to 1456 tomorrow. Currently it's trading, as I said, at about 1415. So I'm looking at about a 41 point move in Amazon. That's very doable. So, there's a lot that is still going to be worked out to some degree in the overnight session. I'm curious, and to say I'm concerned is and again, that's probably a misnomer. I mean, but I'm always watching the market. I'm always wanting to know what's driving price. So I'm always looking at the news. I'm always evaluating price action. And I'm always connecting to the energy of the market so I can determine the sentiment and visually assessing the momentum associated with the market. Now, in the overnight session, there's not as much volume, so the energy is reduced a little bit, but it doesn't matter very much if you get this kind of price action where the market just literally topples. So, we could have something happen overnight tonight. Who knows? Nobody saw this coming. So it doesn't mean that we can't do it again. But it also doesn't mean that we can't do something like this either. So, we wait and watch and, for anything and really expect nothing, because the market will reveal to us what it is it's going to do as it does it. And as a trader, that's where the rubber meets the road as it relates to being able to become and be consistently successful and profitable in the market. So at any rate, that's about it for today, folks. And if you're watching this on YouTube, please subscribe to my channel, TradeAlerts.com, and like the video and leave a comment for me. I'll reply. Same thing for Facebook. Please like the video and leave a comment if you're so inclined, or ask a question. I want engagement. I really want to I want to provide value, and I also enjoy you all. So at any rate, with that, trade safe, trade what you see, good night, and good trading.